Welcome to the Edge Market Update for Friday, June the 2nd. And we had some more volatile trade this week as hedge funds are purely trading weather forecasts for the most part, and also different yield estimates around the world. But we did make a new low this week on old crop soybeans. We made a low at $12.70 per bushel on Wednesday, and we have since rallied about 82 cents a bushel at the close on Friday, where we closed at $13.52 per bushel. Some bullish reaction here off the low with a ton of good buying volume, which was great to see. We did close above the 9-day moving average of 13.25, and we are attacking the 20-day moving average at 13.57. If we do get above this level here, definitely would expect that 13.83 level to trade. Which would be pretty good resistance there. So if you have old crop soybeans in the bin, that may be something to consider if you are holding on to some soybeans. If we do clear that, the next objective would be that 14.11 area where the 50-day moving average is at. And then above there, the long-term trend line resistance is now projecting in that 14.60 to 14.70 range. Where if I did hold old crop soybeans, I would be a seller at that long-term trend line. Again, we are in a long-term downtrend, but in the short term, we are perking up a bit and have the opportunity to possibly travel higher in this area. In regards to next week, really would like to see that 9-day moving average currently at 13.25 hold. If that doesn't, certainly have the possibility to trade back down to $13 and hopefully not below down to that $12.70 where the low is now. In regards to technical indicators, we were very oversold in the middle of May. We traveled a little bit higher, made a higher low, made some positive divergence here on the strength indicators, and have since bounced up. So we are close to a neutral reading. Money flows are almost overbought in the short term, but they do have a ways to travel before they do reach that level. Long term, we are in a long-term downtrend, but we are trying to hook back up here and hopefully can hopefully travel back to that neutral trend line here. In regards to new crop soybeans, we closed the week at $11.84 a bushel. We did make a new low this week at $11.30 a bushel, but have since bounced about 53 cents a bushel. And was nice, we have a sharp negative trend line here in the intermediate term back from beginning of May through now, and we did close above that today. So we did close above the 9-day moving average. So in my opinion, the risk is to the upside here. And it looks like 12.05 could test here shortly if we do get some buying volume above there. We're looking back at that 12.47 to 12.50 area where we had a prior low, and then we ultimately that failed below the sharp sell-off in May. Would consider that 12.50 area pretty heavy resistance, and then we have some longer-term negative trend lining resistance here at that 12.50 area, where if I was a producer, haven't sold too much this year, may be worth starting putting on some floors if we do hit that level, also where that 50-day moving average is in that 12.60 area right there. Nice buying volume this week, and we do have some positive divergence here on the strength indicators, but really have a long way to go here if they do want to break out. Money flows are also turning higher after being extremely weak for so long, which is a good thing. So we're neutral on the money flows, but we have quite a ways to move higher on these technical indicators. Long-term momentum, very poor and negative in the long term, but we are trying to hook up and try to move higher here in the short term, it looks like. Ideally, we can hold that 11.75 area as support. If we do fall back below here, we have the risk of traveling down to those recent lows that we just made this week. Moving on to old crop corn, a good chart here as well. We made a low at 5.47 back in the middle of May, and we've since moved up. You can see this positive trend line here in the shorter term. We have a negative trend line from earlier in March, from the 647 high in late April, and then that resistance would be about 625 to 630 right now. That should be where we test next if hedge funds do keep buying contracts and send price higher based on weather. We do have support here at that 605 area, so would really like to see that hold next week. That's also where the 50-day moving average is, and that was nice to see us close above that level too for the first time since late April when we did have some sell signals. So again, would like to see a test of that 625 to 630 level. If we did test there, certainly if I had old crop corn, that may be a pretty good spot to consider selling it if you can't hold on to it any longer, or if you need to hold on to it longer, you want a better price. Certainly we would consider putting in a price floor potentially with a put option there. If we do fail back below this upwards trend line, it's a very steep trend line that could open up a test of about that 577 to 580 level again. If that doesn't hold, could potentially work our way back down to those lows. So really, we're trading a weather market right now, so as long as these forecasts remain hot and dry, the risk is to the upside, and would expect this upper trend line to test at some point here in June. We are very overbought in the short term, and strength indicators are getting to be pretty overbought as well, very strong. So that's what we want when we want to make grain sales, but at the same time, if we want price to go higher, really we would really need some consolidation in this area, allow these technical indicators to cool off some, and then hopefully we can push towards that upper resistance level if you need to make some grain sales. Long term, we're better looking on corn than soybeans. We're still in negative territory, but you can see we've kind of making a double bottom here on the long-term momentum, and we are headed back to a neutral area. So that is a better reading than soybeans, but still have some work to do certainly. And we close the week here at 609, which is a very nice recovery off those lows in the middle of May. And to finish up with new crop corn, again, we're in a long-term downtrend, but in the short term, we've made our low from mid-May was 491. We've had a very sharp rally here. You can see this steep trend line, and it's been a very positive rally. We closed above the 9 and 20-day moving averages, and we actually closed above 537 today, which could have been a quadruple top if that didn't happen, but we closed above there and actually pushed above the 50-day moving average and closed at 541. So that was actually the first time we've closed above the red line since February 14th. And so that's a very positive thing. We're above all moving averages that we track here in the short and intermediate trend, and so that is a positive thing. Next resistance level that's pretty good resistance is that 547 to 550 range, where I would consider that to be heavy resistance. Ideally this week we could go up and test that level, spend some time consolidating here between the 50-day moving average or that 537 area and bouncing back and forth. Let these technical indicators cool off. We're very strong on the strength indicator, very overbought on money flows, and so if we could let those cool off a bit and then recharge and break through that resistance, right now I'm looking at the 565 to 570 range per bushel to potentially be either making some new crop grain sales or definitely putting in hedges and price floors there. Definitely was not a good feeling when we were in a free fall on new crop corn all the way down to 490. If you did not like that feeling, I would highly recommend, if we get back up to this area, to take some type of action to protect yourself on price. It could happen. It could happen any time. Traders are purely looking at these weather forecasts, and if there is a rain event that's projected to come in, It could certainly send price in a bearish direction again, and all it takes is one forecast to do that. So know where your break evens are, and try to be proactive to better manage your risk. So again, we're getting very strong here on these strength indicators. Money flows are getting very overbought. Long term, we're still in a downtrend, but we have turned higher and trying to move towards that neutral line. So we'll just continue to see what happens next week. But again, that 547 level is key. If we can break above there, really hope to get back to that long-term downtrend resistance, where I would be making some decisions on managing price risk. If we do fail below that 527 level, certainly we have more, in that 520 range, we have pretty good support, pretty well established. But if we fail below there, we do have the risk of moving down again. But we'll continue to play it by ear. If you have any questions about this, if you need any help, looking at a brokerage account to do some of these price risk management strategies, give us a call. Definitely have those contacts to put those in place. And if you have any questions, feel free to call anytime. And hope you guys have a great weekend. Thank you.